Good evening, everybody. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex trading room for August 18th of 2019. We will proceed with our regular agenda. Look at the prior week, our currency strength meter for the past week and the past month, fundamental announcements on the calendar, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. This was a bad week. There's no denying that. There was a significant shift in the markets. We had 48% drop in one of the South American stock markets. The U.S. had 2 days where the drop-off was quite significant, sparking fears of recession. The yield curve inverted, another sign of a possible recession in the works. In essence, the markets were extremely choppy, not conducive to good trading, obviously. And, well, it is what it is. The long-term account was the least affected. We've actually had some good opportunities throughout the week to open new trades, and we took them. We haven't had any trades closing against us, but we are carrying a bit of a negative on open trades right now. The only one carrying any significant profit is the Euro Swiss short, which is a little bit over 100 pips. The others are in varying states of negative, but again, this is long-term trading. So the likelihood of some or all of these turning around into profit is actually quite high. So no significant changes there. The intermediate term account did take a hit. It's probably the first time we've taken a significant drawdown so far this fiscal year. We're down about 8% for the week, and we did close out most of the trades and refuse to enter any new trades until the market stabilizes to some degree. Now, even though we did take a drawdown, I'll point out that we're still 50% up for the year. So again, these losses every now and then are unavoidable, are part of normal trading. The important thing is that we are significantly up. This is obviously our flagship account at this point in time. The intermediate trading has really shown this year. Probably it is going to be surpassed at some point by the long-term account. That's simply the nature of the different time frames when trading. But right now, the intermediate account is the one carrying the bulk of the profit. And again, still at 50% positive despite the drawdown from the prior week. And last but not least, our short-term ledger. This is the one that really took the hit. So we are right now carrying a negative on this account for the first time, I think, in the entire year. Not a huge one. We're down about, I'm going to say 4 point something percent overall. But we did take a similar hit to the intermediate, about an 8% hit for the week that just ended on scarcely 5 trades. But given the choppiness of the market, pretty much all of them went against us. We had one winning trade, and it wasn't enough to really move the needle in our favor. Obviously, it helped, preventing a deeper loss, but still, most of the trades did go against. Again, I want to stress that this is perfectly normal part of trading. We're not going to be winning every single week. Notes and opportunities for improvement. As I mentioned, we had a massive shock to the markets as the yield curve inverted. Recession fear sharpened, and stock markets plunged all across the board. We had drawdowns as a result, as we just covered. And again, that's just to be expected in times like these, especially with what happened last week. We're obviously going to be waiting for the market to indicate a direction as we kick off the week. We're not going to be rushing into trades. But waiting for it to give us the right opportunities. I think the one exception to that is the long-term account. We do have some ideas about the direction the market will take in the months to come. And the long-term account, by its very nature, is not as susceptible to the choppiness of the shorter term market. So we have taken a number of trades as reported earlier, and we will stick to those. Obviously, we'll be managing them and making sure they're either moving in the expected direction or make the adjustments as needed. We are at a cusp in the market right now, and a continuation of prior trends is just as likely as reversals, which again is why we're not going to be jumping into trades. We're going to wait for the market to tell us which way it's more likely to move and to actually start doing it before we take any of these trades. And again, the long-term account or long-term trading in general is going to be a lot stabler during times like these, because these movements that seem to be so big on the shorter term charts barely show up as a blip when we look at weekly or monthly charts. So we will be continuing to follow trends on the longer term account, and of course wait for the right opportunities in the shorter time frames. Looking at our relative strength meter for the past week and the past 7 days, the past month and the past 7 days. The past month, not a whole lot has changed. Volatility slightly dropping to a little bit under 12%. We can still see that the metals, silver and gold, have been pretty much outperforming the rest of the market. For the monthly, we can see that the Australian, the pound, and the Kiwi were the clear losers, with the Swiss, the yen, and to some degree the dollar being the winners, and the rest of them, the Swiss, if I didn't mention it, also a winner, and the Canadian, the Euro, Canadian and the Euro being sort of middle of the pack. That's for the monthly. For the past week, volatility remains pretty much where it was at around 2%. We still see some very nice movements out of silver and gold, but more importantly, you can see that the pound had a really stellar week. So part of the choppiness of the market last week was the pound regaining some strength, as we had a lot of back and forth in the UK's parliament trying to block Boris Johnson's options to go into a no-deal Brexit. That seems to have failed. So it's pretty clear, or at least it's clear to me right now, that if Boris Johnson wants to crash out of the EU come October 31st, he is almost pretty much assured of being able to do so. In an article I read earlier today, it does look like he's using that as a threat or as a trump card to open up negotiations with the EU, but there really isn't much forcing the EU to sit back down and reopen negotiations. So obviously we'll have to wait the next few days to see how this unfolds, but I don't see his threat as going anywhere. And that means that the likelihood of a hard no-deal Brexit come October is just as high, if not higher, than it was a week ago. If that plays out in the market sentiment as it should, then it's very likely that the pound is going to give up some of that retracement that it had last week. But again, too soon to tell. The market's already opened. I've been looking at the charts, and there's been virtually no movement. Pretty much everything is the same as it was on the market close on Friday. So we'll have to wait a day or so to see if there's any movement. I may set up a few triggers on some of the likelier pairs to take advantage of any movement back towards pound weakness. But at the same time, we have to be very careful. If we have another choppy market like we had last week, then we're going to be taken into trades and then just as quickly taken out at our stop loss. And that's the one thing we do not want. Other than that, for the week, the euro is the clear loser. Again, we have a lot of fears of recession starting to hit the Eurozone. In particular, Germany was looking at decreased productivity, lowering of several economic metrics, a lot of things pointing at a recession hitting Germany. And as we all know, when you say the EU, we're really talking Germany and France. So anything that affects Germany is going to be a big deal when it comes to the EU. We'll look at the calendar shortly, but there are a couple of significant events coming out this week, which could significantly move the needle when it comes to both the dollar and the euro. Anyway, back to our weekly relative strength meter. The Australian didn't have that bad of a week, but didn't have a good one either. The Canadian, same thing, very middle of the pack. Swiss, the same. Euro, clear loser. Pound, clear winner. The yen also gave up ground, as did the Kiwi. The U.S. dollar held on just barely by its fingertips against most of the pairs, most of the currencies. The only one that beat the dollar really was the pound. But if you look at the shading of the squares below the dollar, the movements weren't really deep. You don't see that deep blue that you see with the pound, silver, or gold. Even though the U.S. dollar made some gains, they weren't deep. They definitely weren't in the 2% range, probably around 1%, if that. And again, not in all the currency crosses. And now moving on to our calendar, not a very busy calendar, but the events that are there, some of them are very significant. The FOMC minutes out of the Fed on Wednesday, that promises to be a very high impact event, as it could give some direction to the dollar for the coming months. We all know that the dollar is, or rather the U.S. is looking at fears of recession. We had those market crashes. I'm going to call them crashes at this point. They really aren't a crash, but they were a significant retracement on both the Dow Jones Industrial Average and the S&P 500. And that needs to be addressed. It probably will be addressed at some point in the press releases that come out at the same time as the FOMC minutes, and that may spark either a dollar rout or a dollar rally. I doubt that the dollar will simply stay level. Something will happen on Wednesday. And then we have the monetary policy meeting accounts coming out of the Eurozone, out of the ECB, on Thursday early in the morning. So we'll be trading that one as well. And I would like to highlight, even though it's not something we can trade because it isn't a specific event that comes out, but the Jackson Hole Symposium, one of the most important Fed meetings throughout the year, is happening this week. It's called the Jackson Hole Symposium because it happens in a place called Jackson Hole, which is a very big fishing destination for those who like fishing. And that's exactly why it's held there. At some point when they wanted to pick a spot to hold this meeting, whoever was Fed chairman at the time said, well, if I'm going to go somewhere, I'm going to get some fishing done. And that's why Jackson Hole was chosen as the spot. So a little bit of trivia there and background info. But anyway, this is a very important meeting, and it will be happening Wednesday, Thursday, and Friday. And at some point, there will, of course, be press releases and press conferences and whatnot. But despite that it says 8 p.m., it's not like something is going to be released at that time, hence why we're not trading it. But we do have to pay attention to anything that comes out of the symposium whenever it does come out. Okay, so moving on, we will start with our charts. Oil was pretty flat for the week. I mean, it went up, it went down, but pretty much ended where it had been before. It's still hanging out at a significant level of support resistance at 54.75, and also right above, not the outermost, but the next outermost rising trend line from the bottom. So it's holding on. It's definitely not crashing yet, but it's not looking as if it's gaining any ground either. It's really consolidating. Euro dollar, this is one of the pairs where the dollar really made some recovery. So we see that the week was nicely bearish for the euro dollar. We did take some profit out of it, not enough, but some. This was our only winning trade, in fact, on the short-term account. So again, the euro dollar has re-entered the descending channel, which is a significant point of support. So we'll see how it starts out the week, but this is one of those, and I said it before, This could go in either direction quite easily. It could drop further, it could go back up, and there's no way of trying to predict that. We just have to wait until it actually starts happening and then try to get aboard for the ride and see how far we can take it. Pound dollar, nice recovery throughout the week for the pound across most of the pound pairs. No exception here. So it did bounce off a new level of support all the way at the bottom. Not that far away from the prior level of support, which is why I didn't add the new line. It's just too close to that 120.85 that we already had. And indeed, since it's trading above that again, I didn't see the need to add the lower level. But it has broken out of the trend line, I guess the middle trend line, we're going to call it. Still definitely bearish, but this retracement this week obviously needs to give us pause, and we need to wait to see which direction it does take. USDJPY, a bit of a pullback week for the yen, and this was across most of the different yen crosses. It did go back up to a prior level of resistance, bounced off of that, and ended the week trading below it, but also still too near for comfort. So this is another one where we have to wait and see what happens. I think longer term, this one is going to go even deeper towards the bottom, possibly all the way down to 100. And indeed, we have a long-term trade in that direction and with that target. But shorter-term trading, it can do anything at all, and we have to wait for the market to quiet down a little bit. USD Canadian also hitting resistance and bouncing off of it. It ended the week with a nice long bullish candle, but it never got back down to where it had started the week. So it ended above the weekly open, but not as bad as it could have been. This is one of those pairs where I'm eagerly awaiting a breakout in either direction. So either for it to go above the 133.50 or below the 132.30, and we will trade accordingly. Again, I'm looking for consistency more than just a breakout. I want to see it start moving. USD Swiss also tried to do a bit of a retrace towards the higher levels of resistance, never quite got near them. So all in all, not a bad week for the Swiss. It did give up some ground, but not as much as some of the other pairs, and it is still distinctly looking bearish. So again, the Swiss franc is a safe haven currency, and it has been gaining strength as a result of the upsets that have happened recently. The one note of caution with the Swiss is that the Swiss National Bank is starting to sound a bit worried that the franc is getting so strong. And they've already indicated that they may take steps to weaken the Swiss franc to some degree. And of course, we know what that means. That means fiddling around with the interest rate. So the next interest rate decision out of the Swiss National Bank is going to be a must trade event. So we're going to have to trade that whatever time it does come out. We'll be trading that one live. But they have been telegraphing that they're not happy with the strength that the Swiss has gained recently. Not sure why, but again, I'm not the Swiss National Bank, so I don't need to understand their reasons. I'm just relaying them. But for now, the Swiss has been gaining strength, and it's still looking as if it might continue that. Aussie dollar spent the entire week above a very significant level of support, never quite breaking past it. And when it did very briefly one day on Wednesday, it just quickly climbed back above. So we didn't trade this one. We were waiting for an opportunity to go short or honestly to go long if it breaks that trend line, and we never got either one. Kiwi dollar, same thing. It never broke support. It did test it pretty much every single day, but never managed to break that level of support, and that means we didn't trade it. Aussie Canadian still traveling between two levels of support and resistance, and we're waiting for it to break either one to trade in that direction. For now, it is a pass. Euro Swiss still looking nicely bearish. We are trading this one down on two different accounts. I think we've got a trade open on the intermediate, and we've got a longer running trade at profit on the long term account. So, well, that's where we are. So our stop loss, as we can see here on the screen, that it's actually showing the open trade on the long term account. You can see that the stop loss is already below where we sold. So we're writing that one down. We're about 100 pips into profit. No significant retrace on this pair all week, so still looking very strongly bearish. It has broken the bottommost level of support, and we're waiting for it to continue that move. No change to the open trades. We'll just let that continue to pan out. The other thing that we should point out here is that quite a few weeks back, maybe 3 weeks back, it did break out of the bottom of that descending channel. So that was another significant level of support that got broken. So the Euro Swiss does look to be very bearish and will continue holding on in that direction. Euro pound, significant retrace. Again, we did see this across all the pound pairs last week. This one was probably one of the heavier ones because not only did the pound regain strength, the euro weakened. So that gave this one a double whammy. It did go all the way back down to a prior level of support, which held. It quickly popped up above it and ended the week there. And this is giving us a good opportunity, if we see the pound weaken again, to trade it all the way back up to the 93 level, which is about 200 pips above where it is right now. Again, we can't jump the gun. We have to wait for it to actually happen. But it is giving us a pretty decent opportunity for if and when it does. Euro JPY also spent the week trading right above the lowermost level of support, so never gave us a good entry. It did have a lot of volatility in the middle of the week, though, going up and going down, but pretty much ending the week where it had started right at support. Euro Canadian, also very choppy market. The Canadian hasn't really been directional for a while. It's starting to go sideways again. It went up past Ichimoku cloud, then back below. It did come out on Friday out of the bottom of that cloud, but it was a very volatile market. So we really did not try to get into any of these trades because there was no safe way of riding this one in either direction. Right now, it is obviously looking bearish. It's broken out of the bottom of the cloud, but that happened late on Friday. So we'll have to wait and see how the week begins, especially how the Canadian and the Euro are going to be reacting as the week starts, and maybe we can pick something up here. There is a decent distance between where it is right now and the bottom level of support. There's at least 100 pips there to be taken, probably a little bit more. So we'll keep an eye on this one. But again, given what happened last week, we're going to be very, very cautious and making sure that risk control is our main guideline. Pound JPY, again, a pound pair, so we had that retrace last week. This one wasn't as deep as some of the other pound pairs, but still, it went above a prior level of support resistance, and it stayed above it as the week ended. So I'm very curious to see how all these pound pairs are going to react after the statements that Boris Johnson has made over the weekend. No movement as yet. I did check the market right before this session, and they really haven't moved much, but at some point, I'm sure they will wake up. Aussie JPY, another one that stayed above support and below resistance, so technically sideways, and is not giving us any decent entries in either direction. Euro New Zealand still retracing back to that prior level of support, but that level of support at the 172 is holding. It's been tested at least 3 times. It's held all 3, didn't even pierce it, and obviously the fundamentals are very weak for the Kiwi, which means this one should have gone up but the euro also weakened. So we had a weak currency against another weak currency, which of course means sideways action. We'll have to see. We do have an open trade on the Euro New Zealand. We'll have to see if this one wakes up, if the Kiwi wakes up before the actually if the Kiwi doesn't wake up and the Euro does, so that this one will start going higher. We are trading it up for a longer term trade. So we need the Euro to regain a little bit of strength, not much, and that should tip the scales on this pair and on our open trade. Pound Canadian, again, a pound pair, so it went into a retrace. It hit a prior level of resistance, and it was stopped there and started going back down. And while it did cross the trend line, it is sitting or was sitting on top of the trend line as the week ended on Friday. So this one is still very, very bearish, but of course, given last week's action, we have to be cautious in coming back into this this trade. We do have a long-term trade on the pound Canadian, and we're keeping it open. No change there. But on the shorter term, we're going to be very, very cautious when it comes to re-entering this one. Still, it's very bearish. I mean, it barely broke that trend line. We don't see any significant threat to the trend line since back in, when it started in April. So that's April, May, June, July, August. It's still going strong. And based on what we know of our fundamentals, with all the Brexit stuff happening and the CAD, which is overdue for a little bit of strength, this is why we have it open on the long term. It becomes a very attractive long-term play. The question is, can we make it attractive on the shorter term trades as well? And last but not least, pound Swiss, same thing. It retraced because it's a pound pair. So all the pound pairs retraced last week. But this one didn't come anywhere close to the level of resistance marked by the trend line. And we really don't have a horizontal level of resistance because it never established a valid low until the very bottom of the screen. So from when it started this movement over here, started going down, we have no valid low, no valid low, no valid low until down here. So we really don't have any level of support resistance that we can target there along the way. We have no valid low and we have no valid high until, well, this valid low down here. So it still lacks quite a bit of distance for a trend line test. And already on Friday, it started retracing back towards the bottom. So this is another good candidate for a continued short. But again, I want to see the week begin and some directionality be established before I get into this trade. That's it for the charts. Setups we see in progress. Not a whole lot. As I said, uncertainty is the name of the game right now, which means we're going to be ultra cautious when it comes to the short term and the intermediate. The long term will take care of itself. But in particular, with the pound pairs, what we've mentioned, we had a significant retrace across most of the pairs. It was overdue. We've been saying it for a while. It went down too fast. There needs to be a little bit of a retracement, even if it's going to continue. But that does beg the question. Has it actually bottomed? Have we made a low that's not going to be challenged for a while, maybe until October when Brexit actually plays out? Or is this only a temporary reprieve before it goes on to make lower lows? No idea. We just have to wait and see what the market does. The Swiss pairs, the Swiss franc is still holding on to its own. Apologies for that interruption. Looks like we had some internet problems along the way, so we are back. I was on the CAD pairs, mentioning that the CAD is still not out of the woods. And while it has lost ground against some currencies, it is hanging on. So it's still looking like a good strength play might be had out of the Canadian on some of the pairs especially, but too soon to tell. It is a good option. Keep an eye on it, but nothing's given here. USD, USA, of course, the USD pairs. The dollar is in a very delicate position given what I've been mentioning in the first part of this call. We've got significant fears of recession, not just in the U.S., but globally. The stock markets are stressed. Argentina had a 50% stock market drop in one day, and their economy just pretty much took a hit. Let's keep it down for the rest of the year, if not longer. The U.S. stock markets also had some heavy single-day drops. So again, the dollar is at a position where I definitely would not be long on the dollar for a long-term trade. I may trade into dollar strength for shorter-term periods, but definitely not in the long term. And the euro pair, same thing. Recession fears are weighing on the EU, especially Germany, as I mentioned earlier. And let's face it, that is the EU. Germany is the bulk of the EU from an economic perspective. And of course, the U.S.-China trade disputes aren't helping because they are spreading contagion to the rest of the world. The EU is looking really scared, and the euro may be running for cover at any point in time. So look for opportunities to trade into euro weakness, and risk control has to be your number one concern right now. Control your risk, make sure you don't lose too much, and you'll be there for when there are significant winnings to be had. And that is the end of our session of the word drawdown. Obviously, this week the market threw us for a loop. I think it was Ben Stein who said after 2008 that anyone who made money during October of that year had been doing something wrong. If you made money in October of 2008, you were doing something wrong. Same thing applies here. Anyone who made money last week, probably doing something wrong, but they made money. Okay, yeah, sure, but that's a one-off. If I make money 9 weeks out of 10 and you're happy you made money 1 week out of those 10 and the rest you lost, well, I'll just continue doing what I'm doing because I'm making money most of the time, and I know that I can't make money all of the time. Trading as a career involves losing money now and then, more so when you're doing things right, because it's never going to be 100%. So proper trading practices will have you win more than you lose, but there will be those times when you do lose, and you can't get away from that. You have to accept it. If losing some of the time scares you, then trading is not for you. Go get a job. There's no shame in that, by the way. There's no shame in working for a living. This is not for everyone. Trading is not something that's for everyone. That's been proven. And a wise man knows her limits. A wise woman, a wise man knows his or her limits. If you can't get past the idea that sometimes you'll be losing in the market, then just don't trade. Nothing wrong with that. There's many ways to make money. Trading is simply one of them. It's one I happen to like very much because it doesn't require a lot of my time and effort, but there are other ways. Pick one that works for you. If you like trading, however, stick around with us and let's make money together. That's going to be it for me this week. Any comments or questions? And again, apologies for the momentary interruption back then. Okay, then thank you very much, and I will catch you guys next time. Thank you.